do you actually look at this? Do you look at this, you know, as a kind of binary outcome, or does pound just become much more volatile? Because again, there's like 15 options open here.
Yeah, I think given the uncertainty that kind of the summer has kind of been highlighting here, yeah, I just think things look very kind of negative at the moment, despite, you know, what's going on with kind of the Bank of England sort of suggesting that rates are kind of too low. I just think the huge uncertainty over the direction of Brexit just leaves the pound just so unattractive at the moment. If you look at positioning, for example, last September there was a conviction call that sterling was going to trade lower, and that got unwound into April. So the market speculators were about flat in April, and I think we're just seeing that starting to build again, those sterling shorts, and you probably think, you know, sterling looks very vulnerable this summer.
Okay, what are you modelling next? Is it, you know, possibly a UK under Nigel Farage, or is it a UK under Jeremy Corbyn?
The playbook of populism generally goes through the implosion of the political center. So the moderate parties tend to lose consensus. So both Labour and the Conservatives are losing consensus, and we see this happening. Other parties will gain, potentially the Lib Dems, but also more extreme parties on the left and on the right. So this is what we are seeing. It also means that policies become harder to predict, and eventually they are damaging. I mean, we know that Brexit is an unrealizable plan to make the UK exit with an economic gain. It's clear that the UK economy is so linked to Europe that there is an economic loss in any case. So what we see is either a deal or an extension, so either a good deal or an extension or a muddled through situation. In neither of these two cases, the Bank of England is going to hike rates. It's either a pause or rate cuts. And so what we are seeing is the market bought some hopes of a deal at the beginning of the year, and now these hopes are gradually disappearing. We're also seeing some weakness in the economy from a bottom up. So corporates like Thomas Cook, exposed to, you know, people consuming for holidays, has issues, you know, and other firms like Metro Bank, for example. So we're seeing some weakness from a bottom-up basis on the consumer and on the corporates and banks in the UK.
Chris Turner, I want to show this very quickly here. This is what the pros look at, folks. I've never shown this on air. I usually show cable, which is sterling dollar. This is euro sterling, and it's real simple, Chris. I've got a massive bet, as you mentioned, for weaker euro. Frame a 125 handle, a 124 handle, a 123 handle. What does that mean to the market to see those different levels?
Yeah, I think it's a continuation of the discussions we've had so far. I think if you touch on where does this go from here, I mean, what are the risks of a no deal? So that left field risk where we were before, and we'll probably talk about European elections coming up shortly, but were Farage and his Brexit party to do so very well and cause a lot of trouble in Brussels, then the debate will move on to what is the likelihood of Brussels wanting to offer another extension in October. And so I think it puts the no deal risk back on the table, and obviously going to keep that left field risk and sterling very much undermined this summer.